This is going to be a video over the 10th, so last Friday, 10th of September. Coming into the day, big gap up, and let me adjust for, there we go. Let me do it like this. So big gap up after a channel, and you can call, a bear channel, often it's a breakout, trending, breakout. Well, it's a trending trading range, so you get a trend, trading range, trend, trading range. Gapped up, so bar one, it's always in long, probably will pull back to the moving average. Big bar two, have to wonder if we'll get bad follow through and a little bit more down. Now we're probably always in short consecutive bear bars. You could get a stop entry buy above, but a lot of traders will start to sell, stop up here or here. It's possible that bar four is the bull bar closing on its high, but at the moment, it's probably not going to be. And then you get another consecutive bear bar. This could be a sell vacuum test in the moving average, but as of right now, it's always in short. Odds are you'll get a little bit lower. Probably will test the lows of down here. So probably will test the low of the day. Yesterday's low, which would have been Thursday's. Another bear bar. It's, again, what do you notice? It's the best looking bear bar. It's probably exhaustive. The open of the bar did not go above the close of the prior, so testing down, probably going to find buyers somewhere down here and at least bounce. So most traders would look to sell a pullback rather than selling closes down here. And that's what traders did on this bar. They sold the high, probably scalped out, and you can see it went lower. It's a low one short, just to point out. And it's not, you can buy it, but it's not a great buy because number one, you could test support here. We're at the moving average. We may test support the low of the day. It's also a 1, 2, 3, 4, 5 bar bear micro channel bear breakout, and it's a stop entry on a higher time frame. So this probably would have to trigger. It's a, if you look at a 30-minute chart, I'll do it, but it's going to screw up things. This is what it looked like. So it's probably going to have to trigger, and that's why we had this big bear bar right here. It was triggering the stop. So if you sold on a stop at, your entry would have been 88.75. You would have needed price to go to 88.5. So what I'm saying is 84.5 would have been 2 points, which means 82.5 would have been 6 points. So this went down 6 points. So if you sold on a stop below the bar, you'd made 6 points. And, that's probably a scalp on a 30-minute. But either way, that doesn't matter. You got a big bear bar. It's the best looking bar above support, which is here. We're probably going to have to fall below this support level. It's probably exhaustion. Odds are it's an exhaustive sell climax. We're probably going to go back to the high of this bar. However, we may have to get a leg or two down, one leg, maybe two, before we test back up. Bear bar, it's, bears will be disappointed, or bull bar, bears will be disappointed. Some traders will look to buy back. They sold the close, they'll look to buy back their shorts here. I think a lot of traders instead would, if they're selling closes, which I would not, they're probably scaling in and they're going to scalp out, which you can see they did. Other traders would. There's numerous things. You have weak bulls who may buy the close, get stopped out here. Other bulls would just buy the lows here. Some bears know that, so they're going to take profits here. It doesn't change my thought process. We tried to reverse here. We tried to reverse here, here, here. What are we doing down here? We're trying to reverse. So I think this will be a failed breakout, but I don't know how low we go. Low one short after this, trying to form a measuring gap. I don't think the measuring gap will hold, but I think it'll go lower. Second entry buy, but big tail, tight trading range, 4 bar tight trading range. So not a great buy, stop below. It's an okay buy. However, I think a lot of traders would use a wide stop, maybe somewhere down here. Second entry short, probably going lower, probably have to fall below these lows, the low of the prior day, which was the 9th. Big bear bar, disappointment, closed at the midpoint. I think a lot of traders will start buying closes down here and scaling in. You can see clearly a lot of traders took profits. It's the best bear bar. It's the biggest bear bar of the move. It's a consecutive sell climaxes, parabolic wedge. You can say wedge 1, 2, 3, wedge 1, 2, 3. It doesn't matter. It looks like it's failed breakout of a trading range. Bear bar, follow through, but not great follow through, and it's late in the move. So I think we're going to bounce. Now I do think we'll, even if we rally, we'll form a trading range. We'll form a, well, let me do it like this because you can't see the screen. Even if we, and ignore this down here, even if we rally here, I think we'll rally and form a trading range and then get trend resumption up or trend resumption down or trend reversal up. I don't think we're just going to continue to go down. But ultimately, the bears want some sort of large measure move down like this. And, more realistically than that, they first want this, a measuring gap from maybe the high of the day to the middle, testing down to here. Others want, they've already got this. So next they'd want that. So as I said earlier, I think we're going to, if anything, rally and start to go sideways or get trend assumption down. I wouldn't be short down here. I'd be out of long. I'd be out of shorts. So 3 consecutive bear bars. We may go a little bit lower, but typically when you have a second, I forgot to mention this, when you have a second entry buy, a lot of traders use a really wide stop and they'll look to buy more lower. So when you're in this situation, traders buy and they buy more lower. Traders that didn't buy here, they know that, and so what they start doing is they start looking to buy. And some will just buy at the market, some will buy, they'll buy this bull close. Why would they buy this bull close? Well, think about it. It's a micro double bottom. It's a bear bar, but it's kind of like this. Traders anticipate that bears will be disappointed. So if bears are going to be disappointed when they see this bar, what are they going to do? If bears sold at the close, they may look to get out of break even. So if I buy the market here, use a wide stop, I may catch trapped. I may be in the move when it goes up and traders are trapped. And you can see low 1 short. We ultimately went to a new low and immediately reversed up. And why is this? Well, first, why did this happen? It's the gap. So you have some bulls, and these bulls, by the way, they'd buy and they'd probably scalp out. You have bears trying to defend this opening gap, and they're hoping to get a gap open and have a bear breakout below a trading range and a large measure move down. The bears would love to see something like this, where we just have a huge sell-off, but we probably won't get that. And then we got that, and the gap's probably going to close. As you can see here, bulls are trying to close the gap, but they're failing. And we're selling off, and then we get this. So what's important over here? Well, look how many times traders are buying, making money, buying new lows, making money, buying new lows, making money, buying new lows, making money. If bulls are buying on limit orders, eventually a stop order is going to work. And if when stop orders start to work, it increases the chance that we're going to have a rally. So clearly a trading range here. Bulls will start buying, and eventually bulls are going to start buying for a swing. And you can see bulls bought, 50% pullback, low close down here, couldn't get to it, second entry buy, and then went outside down, and now we got another bull bar. So, and then we started to rally, but I wanted to back up, and the big important thing here is when you start to get stop entry, you don't know which one's going to work. However, a lot of times traders will use a wide stop. Maybe they'll buy this bar and use a stop, maybe a measure move down, and then they'll look to buy more below the bar. Or, this is what Al talked about on Friday, traders will buy, they may buy one contract or one position, stop below, and get stopped out. And then they get this, they may buy, if they bought one contract, maybe they buy 2 contracts, stop below. So it's in essence, in a way, it's doubling your position. So it's a form of scaling, and it's a safer form of scaling in, because you don't have the exposed risk. And then we got the rally, close the gap, probably going to test up to here. So strong breakout, odds are you're going to go sideways to up, at least have a second leg up. Clearly always in long, fail breakout below the gap, may get a measure move up like this. So no reason to be short, and we're channeling, starting to go sideways for many bars. We tested these highs up here, and whenever the market's doing this, it's really hard to, you have to wonder if we're going to get a major trend reversal. So clearly this is major, and this, but you still may have to have a test down in some sort of higher low. So it's always, you have to be thinking about, will we get some sort of sell off down to here? Will we close this gap? So as strong as this rally was, it's a trading range. Let me do this, because I just really want to point this out. We had a leg down, so we had a spike, pullback, start of a channel, breakout, pullback, start of a channel, testing the top of the trading range. It looks, it's easy to look at this and just assume we're going to keep going up. However, what we don't know is if this was a buybacking test of resistance and we're going to find sellers. We don't know that, hey, maybe bears just didn't want to sell. They're going to give the bulls 10 bars, 2 legs, and they start selling up here. So 3 consecutive bear bars, high 2 buy, but you got to wonder, is this a gap, and is this strong enough for a second leg down? This is often how, I want to back up for a minute. Double tops are always, you hear double tops, 40% chance of a bear breakout and measure move down. So in other words, 40% chance of this happening. Why is that? Well, often major trend reversals look like they're going to work. So you buy here, it looks like it's going to work, and it never looks like it could reverse and get the bear breakout. But what it does is it traps traders. So bulls are long, where they're looking to buy, and they want to buy here, but this just isn't quite, it's too strong. So they wait for a second entry, and maybe they wait there, and then we get a bear bar, follow through bar, then we get another bear bar. 3 consecutive bear bars. That's odd. Why would the bears get 3 consecutive bear bars in a pullback? This could be, and we've had a pullback for 10 or so bars. Is this a bear breakout of a wedge? 1, 2, 3. Was this a wedge bottom? 1, 2, 3, and it failed, and now we're getting a bear breakout and a few legs, and maybe we get leg 1, pullback leg 2, high 2 buy. Here's a wedge, 1, 2, 3, but you got to wonder, is this gap going to stay open? Tried to close the gap. Three consecutive bear bars. 3 consecutive bear bars. 4 consecutive bear bars. Another buy. We'll probably, bulls bought above. They may use a wide stop, buy more and look to get out or break even, which they did. And ultimately, we ended up selling off, and we started to form a tight channel, tested the lows, and this is why it's very dangerous to be buying down here, especially late in the trend, because you could buy and just get an endless sell-off, which is what we got into the close. So, more or less, when it's late, it never looks like you're going to get the measure move down. Number one, that's the first thing I would say, but it happens often enough, and you can see we came basically within a tick or so of it. Second is when you're at a new low down here, be careful about buying when you get 4 consecutive bear bars and then a 5th bar, because you may just get an endless pullback. Hope this video helps.